back to my channel, the best place to be wherever you are on your wealth journey right now. Today I'm going to be talking about mortgage repayment holidays. What exactly are they and should you go and get one? But first of all, I will say that if you're interested in more videos on personal finance, mindset and wealth creation, then do subscribe to my channel just underneath this video for plenty more just like this one. So mortgage repayment holidays. It's a bizarre time in which we live at the moment, isn't it? That our mortgages can take a holiday, but we actually can't. But here we are. And there's been so much in the news recently about mortgage holidays as well. So I just wanted to touch upon exactly what they are and whether or not you should go and get one if you haven't done so already. Back at the beginning of the pandemic, when we first went into lockdown, the government authorised lenders to be able to give us all payment holidays for 3 full months without it affecting our credit score, which was the big thing. Now remember, I said credit score is really important, and so to be able to get this level of borrowing without it affecting our score and to be allowed it without asking very many questions is absolutely amazing. Now to make this slightly easier to understand, I'm going to break it down into residential mortgages, which is the home that we live in, and also investment mortgages. So if we've got buy-to-lets, HMOs, any other kinds of investment property in the background, I'm going to talk about those separately. So what exactly is a mortgage payment holiday? Well, mortgage payment holidays might seem like a relatively new thing that has just been kind of dreamt up because of the coronavirus, but actually they've been around for absolutely donkey's years, and I can happily say that I actually took one of these out in 2007. And I took out my mortgage payment holiday because, do you remember the debts I told you that I was having real problems with up here? Well, I was really struggling to make ends meet, and I thought actually to make it slightly easier, I'll take a payment holiday, so at least I don't have to pay my mortgage for a month, but I can still have everything else ticking over in the background and it won't affect my credit score. Because that's exactly how mortgage payment holidays should work anyway. And what you will find is that lenders do actually offer mortgage repayment holidays as part of your actual mortgage. So let's start off by talking about your residential mortgage outside of the coronavirus situation then. Because usually, and I will say this is lender dependent, you would be entitled to take one providing you meet certain criteria. How do you know whether this applies to you? Well, when you originally took out your mortgage, you would have been given what's called a mortgage offer document. And that's the document that has exactly what your mortgage is, what your interest rate is, how much you're borrowing, when you've got to pay it back, all of that good stuff, all in one document. Now I've got my mortgage offer here. It's with Virgin Money, mine. And if I open it up, it says that I am actually eligible for a payment holiday. So it says here, payment holidays are periods of time where we do not need you to make your monthly payment. You can take a payment holiday with our consent. So that's the important bit here. You have to ask your lender for permission to have a payment holiday. And something I will emphasise very strongly is that if you just cancel your direct debit on your mortgage, that is not taking a payment holiday, okay? You have to talk to them about it and they have to do everything from their end. If you just cancel your direct debit, you may end up in very hot water, because what will happen is that it will leave a big black mark on your credit file because it will say you've made a late payment or you've not made a payment at all. And that will have very dire consequences for you in terms of your credit score, which again, as we talked about before, credit scores are very important. So please don't do that. Make sure you continue your direct debit, but speak to your lender first. Okay, then it says, if you apply for a payment holiday, we will assess your financial circumstances. You must meet our lending requirements that are in place at the time you make the application. In addition, the following will also apply. And again, this is in normal circumstances. I'm not talking about coronavirus for the moment. This is just your regular everyday mortgage. It says here, you are limited to a maximum of 3 payment holidays in any 12-month period. You must have made at least 9 full monthly payments on this loan for each payment holiday you request, and if you go into arrears on the loan or make an underpayment, the number of payments you have made will be reset to 0 for the purposes of requesting a payment holiday. Now obviously this is the criteria for Virgin Money at the time that they sent me the offer document, which in this case was the 5th of August 2019. So what I will say, guys, is that A, not all mortgage lenders will offer a payment holiday. You'll have to check your mortgage offer just like I have done and see whether it's actually written in there that you can have one. And B, not all lenders have exactly the same criteria. So for in Virgin's case, for example, they want me to have made at least 9 full monthly payments on the loan for each holiday I request. For other lenders, it might be more or less than that. So every lender is going to have different criteria. If you're not sure about it, I suggest you go and refer to your offer document to see whether it's all written in there. And failing that, actually ring up your mortgage lender if you're still not sure, or what you can do is to speak to the mortgage broker that got you the mortgage in the first place. So have a chat with that person and see if they can shed any light as to what your mortgage terms are in terms of taking a repayment holiday. Okay, well let's talk about the coronavirus then, because as we said, back in March when lockdown first started, the government allowed mortgage lenders to give us payment holidays for 3 full months, regardless of any other criteria. So in terms of Virgin Money, for example, where they say about the 9 full monthly payments before I can have a payment holiday, that's been completely waived. So again, with any lender, they don't look at any of this criteria anymore. They just say, okay, have you been affected by coronavirus? Yes, you have. Okay, you can have the payment holiday then. So again, just like the bounce back loan, for example, your mortgage repayment holiday should just be seen as an extra bit of help from the government to tide you over this difficult coronavirus period. The important thing to bear in mind here is that because you're taking a payment holiday for 3 months, that means that you're not paying your mortgage for 3 months, which means that any interest that you accrue over those 3 months will be rolled up and added onto your mortgage at the end. So this is especially important to consider if you've already taken out 3 months worth of mortgage holidays, but especially important to consider if you're considering taking out 3 months more payment holidays, because if you've got 6 months worth of payment holiday on your account, that's going to increase the amount that you pay every single month on your mortgage, and it may even make your mortgage a bit longer as well. And what do I mean? Well, let's say for example you have £1,000 monthly mortgage payment, and let's say that it's a repayment mortgage, so let's say you're paying £600 in repayment and you're paying £400 in interest on that monthly mortgage payment. Now obviously those payments are going to change every single month because when you make payments and whatnot, the interest amount changes, but just for the ease of the maths here, I'm going to keep it very simple, and let's just say we've got £1,000 a month total spending on our mortgage, and £400 is interest and £600 is capital. Now at the end of the 3 months, obviously you wouldn't have made any repayments of capital whatsoever towards the property, but also the interest that you would have paid has been rolled up as well. So if we take £400 and we times it by the 3 months that we've had the mortgage payment holiday, that's 4, 8, 12, that's £1,200 that we now have added onto our mortgage because that's money that we've not paid. The mortgage company then recalculate your mortgage, taking into account the extra £1,200 of borrowing, and they reassess the mortgage and they calculate your new payments accordingly. And you'll find that your mortgage payments will have gone up. Now in the grand scheme of things, this probably won't be a huge amount, but if you're struggling to make ends meet now, then you really want to think about whether you can afford to make the increased monthly payments after you've taken out the mortgage payment holiday. So if you're in any doubt at all, I would speak to your mortgage lender and find out what your monthly payments are likely to be and how much of an impact that's going to have on you after the 3 months is elapsed. So it's something else to be aware of. So I would basically say that unless you're really struggling to make ends meet now, then I probably wouldn't bother taking a mortgage payment holiday on my main home. Now I will say that I personally did actually take out a mortgage payment holiday for 3 months on my main home, and it's because I just wanted to make sure that I could definitely make ends meet without having to worry about anything, and also to make sure that I had enough cash, because they say cash is king at the moment. So just for my own personal peace of mind. And my personal strategy is to take the payment holiday for the months of May, June and July, and then what I'm doing is I'm putting the money that I would otherwise have paid towards the mortgage into a separate savings account, and in August, providing I don't need to draw on that money, obviously it is there at the moment in case I need it, but hopefully I won't need to draw on it, and if I don't need to draw on it at any point in the next 3 months, then I can overpay the mortgage in August, which should bring me back to square one and exactly what my mortgage payments would have been had I not taken the mortgage payment holiday and if I'd continued to pay the mortgage throughout the 3 months. So again, I would say definitely check with your lender which months they're covering for the payment holiday. In Virgin Money's case, for example, it's May, June and July, but some mortgage lenders have started it from April, so it'd be April, May and June. Some have done it even later than that. And I think you have got until the 31st of October to actually apply for your payment holidays in this case, so you've got plenty of time yet. Another thing to think about, bearing all of this in mind that I've just talked about, is whether or not you want to go for the second lot of 3 months of mortgage payment holiday. It might be that because you're able to make ends meet from August, that should be absolutely fine, but it's there if you need it. And again, I would emphasise the fact that if you need to take it, you know, then go for it. I personally don't think I need an extra 3 months of payment holidays, because hopefully by August August I shall be back to normal again, but just in case, you know, it is there for you as a buffer. And again, with my personal strategy, I want to make sure that my mortgage is paid down faster rather than more slowly. So by doing this and making that overpayment in August and bringing myself back to where I should be in terms of my mortgage, it means that I can get my mortgage paid down in the same timescale that I was planning to before. Because bear in mind, guys, if you do take all the mortgage repayment holidays, at some point that money will need to be repaid. So what you're effectively doing is increasing the length of the term of your mortgage because you haven't been paying it down quite as quickly. So plenty of food for thought there. Now, if you are going to apply for a mortgage payment holiday, I will say the application process could not be simpler. All I did with Virgin Money was log on to their website. I don't think I even needed to log on. It was literally just a form that said, what is your name? What is your mortgage account number? So obviously I got that from my mortgage offer document. And it asked me a few details about myself, and I just sent it across, and they said, we will be back in touch with you. And I think it was about 7 days before they got back in touch and said, yes, it's all been approved and you can have your mortgage payment holiday starting from May. So that's all good news. Okay, let's look at investment mortgages then. So this is buy-to-let mortgages, HMO mortgages, even holiday home mortgages, whether they're in your own name or in a company. Back in the BC era, and BC in this case means before coronavirus, of course, BC investment mortgages didn't really have the facility for mortgage repayment holidays. Lenders aren't that keen on them, and it's generally felt that they're not needed on an investment property. Because if we think about it from the mortgage lender's point of view, the mortgage lender says to themselves, would we lend to this landlord? And they think to themselves, okay, well, the tenant will be paying the rent and the tenant has an income, so that's okay. And if the tenant loses their income, then the landlord still has an income coming in, so they will be able to pick up the payment. So actually, the risk to us as a lender is very, very low. So therefore, landlords shouldn't really need a payment holiday. Now, I'm not saying that all BC mortgage lenders wouldn't give you a buy-to-let payment holiday, nor am I saying that anything after coronavirus that they won't give you a mortgage payment holiday. I'm just saying that it's not very common at all for that to be the case. And you wouldn't normally find it on your mortgage offer just like you would with the residential mortgage that we looked at just now. So this again is why it's very, very interesting that the government are asking investment mortgage lenders to also give payment holidays. The reasoning behind the mortgage repayment holidays on investment mortgages is because it was seen as very unfair for tenants. Because if those of us that have got a residential mortgage could apply to our mortgage lender and have a mortgage payment holiday, it wasn't fair then for tenants to not be able to have a holiday on their rent payments. But the problem with this is that when landlords take a mortgage payment holiday on the property that the tenant lives in, all we can do is to pass on the mortgage amount to the tenant. The tenant is still liable to pay us the rest of the rent. So let me give you an example. Let's just say that we've got a property and we're getting £600 a month in rent from the tenant and our mortgage is £200 per month. I take a mortgage payment holiday as the landlord of £200 and I pass that on to my tenant, but my tenant still has to pay me £400 for that particular month. And if they struggle to do that, I as a landlord would be stuck. Now, I've said before that you want at least 3 to 6 months of your current monthly outgoings saved up to tide you over for a rainy day or in case something happens like the coronavirus crisis. Imagine if everyone in the UK had 3 to 6 months of their outgoings saved up. The government wouldn't need to have injected nearly as much cash into the economy as they have done because we'd all be okay. We'd be surviving on our savings. But sadly in the UK, very, very few households have that level of savings. The sad thing is that most UK households don't have enough to last them 1 month, let alone 3 to 6 months. The thing we need to think about at the moment is whether we need to take the mortgage payment holiday. And I would suggest that if you're struggling with your investment properties, if you've got tenants who are not paying their rent, if you're struggling to make ends meet, then I would definitely take out the payment holiday because that's what it's there for. However, if you have savings and or you still have rental income coming in and or you can still make ends meet, then I would probably say don't bother taking the payment holiday. Another massive factor here is headlines like these ones. Landlords with payment holidays could struggle to take out buy-to-let mortgages. Now, this article was only written this week. This is from Which, and it came out on Monday. That's the 15th of June 2020. And the report says that some mortgage lenders are turning down applications for new or further borrowing from landlords because they've taken a payment holiday on their investment portfolio. Now, the article itself doesn't say which lenders are involved in this, nor does it say how widespread the the issue is. So I took the liberty of phoning up my own mortgage broker, Andrew, and Andrew told me it is a widespread thing. He said virtually every lender is implementing some kind of assessment to see whether landlords have already taken out payment holidays on their mortgages. And I will stress that it's investment mortgage holidays that they're looking at, not necessarily your main residence mortgage. So the house that you live in, that should be okay. But if you've taken a payment holiday on your investment portfolio, then that's what they're going to be interested in, and that's where they could potentially refuse you borrowing. So why is this then? Well, let's again put ourselves in the shoes of the mortgage lender. Lenders want to make sure that the company or the person that they're lending to is running their property business professionally and well. If they've taken a payment holiday, it may mean that the business is struggling. And by asking the question at application process, the lender can immediately put a red flag next to anyone that they deem too risky to lend to. Now again, this is not to say that you're not going to get any lending. I know plenty of professional landlords out there who have taken mortgage payment holidays on their portfolio purely as a precautionary measure. They're still getting all their rental income coming in, so they're okay. It's just to give themselves peace of mind. And that's okay. Now, I personally am not one of those people. I haven't taken mortgage payment holidays on my portfolio, but I have done it on my main residence, which I talked about earlier on. But if you have got payment holidays on your portfolio and you're worried about getting further borrowing, then the best thing to do here is to speak to your mortgage broker. Your broker will know all the ins and outs of this. They'll know which lenders have which criteria surrounding this. And as always, be open and honest with your broker. Tell them that you've taken the payment holiday from the outset, and that way they can immediately find you the lender that will fulfil all your criteria, rather than you waiting and not telling anybody until much further down the line, and once you've paid your valuation fees and things, and then suddenly they find out and then they decide not to lend to you. Honesty is always the best policy when it comes to these kinds of things. Now, according to my broker Andrew, lenders are looking at these on a case-by-case basis, so it's not to say that you're not able to get lending. You know, by all means have a go, and your broker will be able to advise and guide you as to which lenders provide what and how you can actually get through your application process successfully. So please don't think you won't be able to get lending without a conversation with your broker first. So I hope that answers a few of the questions that you've had about mortgage repayment holidays, guys. I hope you've enjoyed watching this video. Do watch these two videos next of all, because they will definitely help you with your wealth journey, and subscribe to my channel over this side if you haven't done that already. And in the meantime, guys, stay safe. Thank you so much for watching, and I will see you in the next one.